So, Terry, you say this for investors. This entire situation is the biggest geopolitical risk in about a half a century, 50 years. Explain that thesis. Didn't we see something very similar as far as just the setup of tensions between Israel and Iran back in April?
We did, but what we've got in the highest geopolitical risk, what we've got here is got a combination of two hot wars, one in Ukraine, one in the Middle East, and a third in the near a hot war in the South China Sea, where China continues to provoke and against the Philippines and others. So the tensions are very, very high. And what you get out of the markets, by and large, is a conventional response. Concerns about oil prices and the like. What's different about this, though, in the Middle East compared to pretty much every other Middle East war or conflict going back all the way to 1947, is that one side doesn't want to compromise. One side plainly isn't interested, and in fact, what we've got is, as you point out, a direct confrontation between two of the major powers in the region, Iran and Israel, and a situation where neither side is particularly interested in standing down. So this is a moment of, I think, unprecedented peril.
So you're saying it's a combination. It's the Ukraine-Russia war. It's what's going on in the South China Sea. It's what's going on in the Middle East. It's all of it put together. So you're saying investors, if they ignore it, it's at their peril. So what should they be doing? You're saying the oil trade, that's just, kind of a conventional way to look at it. So what are these other ideas that maybe investors aren't considering?
Well, what you need to do is frankly, kind of massage your risk appropriately to, get out of things that are particularly in peril from all these conflicts, including and take a close look at things like supply chains and the like. Firstly. Secondly, generally speaking, I've said that that investors ought to look at the defense sector, because what is certain, regardless of the U.S. presidential election, frankly, is that you're going to have much greater U.S. defense spending to respond to this geopolitical risk. The U.S., among other things, has positioned itself as the arsenal of democracy and feels strained by the ability to supply allies, and so that's going to be, frankly, I think job one for whoever the new president and whatever the new Congress is.
Okay, so defense stocks, that's one area you're looking at. By the way, we showed this chart to one of our earlier market guests earlier. L3 Harris, Raytheon, Lockheed Martin, all of them moving about 4% higher week to date. You can see the big jump after this news. But I do have to ask you, isn't this already priced in? I mean, we literally saw, like you said, a very serious high-stake attack. It's ballistic missiles. It wasn't drones this time around. Do you think that this sector has more room to the upside, even though we kind of know what's going on?
Well, we kind of know what's going on, but there's really two things. One is that the possibility of something snapping and geopolitical risk jumping still higher, I think, is not completely priced in. There's, among other things, the will to believe, and the will to believe in this case is that the worst won't happen. And I still think that's the base case scenario, but the worst possibly happening has markedly increased just in the last few weeks. Firstly. Secondly, I think investors aren't focusing on the likely U.S. response post-election to replenishing defense stocks and ramping up defense capabilities. That's not something that gets talked about during the presidential election. Neither candidate last night, for example, talked about it really at all and with any specificity. But that is going to be job one post-election, and markets ought to be ready for it.
All right, so you say if investors ignore all this, it's to their peril. You're saying kind of the oil trade's kind of, it's kind of tired at this point. That's kind of just a very, predictable way to play this. It sounds like you're saying the safe haven trades are also kind of overdone. But that's already been done. So what are the other ways as an investor you can play this if those things are kind of passé in your mind?
Oh, well, I would look at, frankly, and the United States has been very transparent about where the areas where it feels that it is deficient. There have been a variety of studies released over the past year. But I would look not just at defense stocks per se. I would look at kind of the broader support, what gets called the defense industrial base, because the defense industrial base overall is something that the United States government on a bipartisan basis really believes is is deficient and needs shoring up badly and quickly. And I would look for that to be something that the government focuses on wholeheartedly after the election.